Hello and welcome to another edition of the Smart Investor Podcast, where smart investors get their information. And today we're going to speak about the continued rise in the Nasdaq. The Nasdaq continues to head northward and up to approach its all-time spike high. It has already passed its all-time closing high, but we're talking about the all-time spike high that was made in the year 2000. We're also going to analyze the gold market, the breakdown in gold market that has taken many folks by surprise, and we're going to see what's the direction of gold from here, and what can we expect in the next couple of weeks. We're going to take a look at the dollar, the the overseas, the European markets. We're going to take a look at also the S&P 500 and the Dow. So we have a lot of things to cover in today's episode. And remember, if you would like to see a video analysis of this podcast, you can go to smartinvestorcentral.com and go to market updates, and you can see the charts and what exactly we're doing if you are listening. Okay, so this morning we have nothing earth-shattering happening overnight in terms of European price action, and we see for the morning so far that the German DAX is up slightly after breaking out of this wedge pattern. This wedge pattern that on the charts, this flag for you technicians out there. Market was in a flag, it broke above that flag wedge pattern. And next area of resistance is up at that 11,920 region for the German DAX. Taking a look at the FTSE. FTSE continues to underperform the major markets. I mean, we are seeing that the FTSE is just barely up on the year so far. It's up, and it started the year around 6,566. It's now at 6,788. So the FTSE is not doing very well, and it also has a massive double top price action on the charts, and we have to wait and see if the market can eclipse the all-time high that was made of 7,122. If we don't see a market accelerating out of that region, we could see some heavy selling in the FTSE. Okay, taking a look at the futures, the S&P 500 is down slightly at 0.5 at this moment, and the Dow is down 27, and the Nasdaq is up 5. But let's take a look at the price action of the S&P 500 yesterday. I mentioned that we were approaching resistance up at this 2134 region. And why is this 2134 region important? It's important because that was the all-time high that was made back in May, and we are now approaching that level. And every time we see the market hit this 2120, 2130 region, we get a decline. In February, the market traded up to 2130. Then it declined down to 2040 by in February, in late February, traded up to 2120, and by mid-March it was down to 2040. We had another rise up to 2119. In March, the market declined again, down to 2143. We had another market movement up to 2120, declined again 2160. And then the all-time high that was made in May, the market went up near 2140. Actually, the actual high that was made was 2134, and the market then declined from there to 2040 again. So that 2040 region is the bottom of this channel, and the 2138 level is the top of this channel. And we see that the market and we see that the market is currently trading at the top of the channel, and a failure at this level would be slightly bearish. I wouldn't say it's the end of the world, because what we see often is that market will approach an old high and stall out a little bit and continue higher, or we may get a modest sell-off. But if we close below that 2140 region, and you heard me speaking about 2140, the market has declined to that level a number of times. If the market closes below the 2040 region, or we could see continued selling, and a lot of system traders, I'm guessing, would enter the market and sell their positions in the S&P 500. The Dow Jones Industrial Average has similar makeup, but that critical region is down at the 17,600 and 17,500. If we close below that level, a sustainable close below 17,500 will definitely be bearish for the market, because we're in that similar channel situation. And remember, we take a look at charts. I mean, the media likes to focus on distractions in the markets, likes to focus on what's happening in the economy, etc., interest rate decisions. But what the charts reflect is actually what the prices are doing. They are telling you, okay, they are giving you the current value of the market at this time, and it can tell you the current trend in the market. And if the trend changes, it will be reflected on a chart. And that's why you can see a shift in the momentum of the market on the chart before the media steps in and says we're in a sustained decline. And I know there are a lot of services out there that are predicting that stocks are going to collapse, etc. Stocks may decline from here, but they have to be reflected on the chart, and you'll have ample notice before the market declines, if it's going to decline. But for now, the bull market is in a tentative state, where we're in a consolidation. We're in a sideways consolidation on the S&P 500 and the Dow Jones Industrial Average, and a break below the critical levels that I said near that 17,600 on the Dow could be very bearish for the markets. On the other hand, the Nasdaq is making new highs, and we're in a sustained uptrend with the Nasdaq. The Nasdaq was in a channel consolidation pattern for about 2 months between late April and early July, but the market has now broken above that channel resistance and is heading on the way up. So Nasdaq shares, the Nasdaq index on a whole is fairly positive and is very bullish. I mean, we have been going through this bull market for since 2009, and we're in 2015 now. So we are definitely in, I would say, in the latter stages of the bull market, but the bull market is still intact. And if the market momentum shifts, then you will definitely be the first to hear it if you pay attention to this podcast, because we'll definitely be bringing to you what is happening in the markets. And if you'd like to ensure that you get your updates, go to smartinvestorcentral.com, and you should see somewhere where you can sign up for our daily market analysis at smartinvestorcentral.com. And I am also pleased to announce we have an exciting package of a free trading course. This is a 100% free investing course for our listeners. This course retails at about $497, but I'm going to make it available to you absolutely free. And what it will do is is we're at a point that I find, and speaking with a lot of investors simply are confused about the stock market. Should I buy? Should I sell? Should I buy gold? Should I invest in silver? Should I buy coffee? Should I buy Apple? And when should I get out? Is the market at the top? What this course does is that it explains to you in great detail how to determine where the market is, what cycle the market is in. Should you buy? Should you hold? Should you sell a certain stock? And that is definitely what a lot of investors need. I mean, the course is not going to turn you into a portfolio manager, but it's going to allow you to be able to manage your portfolio and oversee your portfolio. So if you're a financial advisor or your stockbroker or whoever comes to you and say, I have a great idea for a stock, should you invest? You can simply, the course will give you a quick 5-step plan to look at and say, okay, this is what you should do in that situation. If the stock doesn't meet that criteria, then it's probably best to pass. Actually, most stocks won't even meet the first criteria. And within 5 seconds, you can look at that and say, okay, this stock doesn't even meet the first criteria. I'm going to move on. It's very simple. There is no need to be obsessed with what's happening in the economy or what the analysts are saying on a stock, etc. You can simply look at a stock and in 10 seconds see that, okay, this is something that's worth pursuing. Okay, so to go get that, go to smartinvestorcentral.com, and on the right hand side you will see a link where you can get the free course shipped out to you. Okay, taking a look at the US dollar. US dollar on the morning is down slightly, and we're getting resistance up near that 98 level. I said that this 98 level, it would act as intermediate resistance, and the market traded above 98 briefly and is now coming back to test the 98 level, and the actual level is, we get the actual level is 97.75. 97.75. The market's come back to test it. But what's the direction of the dollar? The direction of the dollar is still to the upside, and the momentum in the dollar is still up. And until we get a shift in that momentum, we may still see gains in the dollar, especially against the Japanese yen. The dollar is doing very well against the Japanese yen. It's at 124.37, and also the Canadian dollar. The dollar is at 129.90 with the Canadian dollar. An interesting note about the Canadian dollar is that the high that was made in Canadian dollar in 2009 versus the US dollar was at this 130.64 level, and the market is currently at 129.90. So we are very close to that high that was made in 2009 with the US dollar versus the Canadian dollar. So expect to see some resistance up at this level with the US dollar versus the Canadian dollar. Okay, taking a look at gold market, we have been getting a lot of questions about gold, and we have been saying for a number of weeks now that the market is in a downtrend, and this is something that will be covered in the stock investment, the free course that you will get on how to analyze a market. Because what we find is that investors make decisions based on emotions and based on what the media is telling them, and what the media says often is often just plain incorrect. I mean, just look on the media in other forms of life, in politics, in when it comes to health, etc. The media a lot of times sensationalize a lot of things and don't really give you an accurate picture. And we saw a lot of folks invest in gold. I would say it's a number one question I get. What is the gold market doing? is it good? Should I hold on to my gold holdings? And and my answer is yes, you can hold on to it if you expect further losses in the value of gold, because gold is in a significant downtrend. And um, and the argument is that, okay, yes, it's in a downtrend, but don't it isn't it better to buy at a low point? Yes, that's true, but how low will it go? Wouldn't it be better to buy when we are fairly positive a bottom has been put in, instead of trying to catch a falling knife? And that's what's been happening in the gold market, because folks were in at 1600, then went to 1500, then went to 1400, then went to 1300, and went to 1200. Now it's going to 1100. Okay, so we're seeing a series of lower highs and lower lows in gold. And over the last, since May 2013, where we were in a consolidation pattern. That's what we call it in chart analysis. And the market broke down below this consolidation pattern on Friday, and we saw huge follow through selling ever since then. And the market is now, the cash gold is at 11.05. We do have some recovery this morning where the market is up slightly. Market is, it's currently at 11.05. It opened up at 10.98, so we're up $7 on gold. But what this could be is, after a huge drop down, we often get some recovery and then another move down in the gold market. So my forecast for gold, and based on the price action and what is happening in the markets, is that we are probably headed down further in gold. I don't see any sign on this chart that this market is in any, or would recover anytime soon. And if the momentum shifts in the gold market, we will definitely bring it to you, and I will say, okay, a bottom looks like it has been put in, and we are seeing a series of higher highs and higher lows in the gold market. It's when you are looking for something to invest in, it's always better to invest in something that's going up if you want it to go up. It's always better to invest in something that's going up in the middle or close to the middle of the rally, as opposed to trying to catch a falling knife. And that's one of the, when I was a novice trader, that is definitely one of the biggest mistakes I used to make, was trying to catch a falling knife, trying to catch the bottom of a market, and the market will just keep heading down and down. And that's what's happening in gold. So if you're short gold, I personally am short gold, and my analysis is for the market to continue to head down from here. Taking a look at crude oil, the market up slightly today. We see market flirting near that $50 a barrel level, which is good for consumers. And the market recovered slightly from the low that was made near that $40 level, and it looks like it's heading back down to retest that low near that $40 level in crude oil. And finally, taking a look at the coffee market, this market is in a downtrend also. So we see there are a lot of commodities out there that are in slight or large downtrends, and coffee is no exception. We have some consolidation on the chart, and we could see a further breakdown below in the coffee market. Okay, so that's it for today's edition of the Smart Investor Podcast. Remember to get the free course on investing and how to invest, the 5 steps before you take or you buy any stock or you buy any investment for that matter. It's absolutely free, and I'll make it available as long as copies are available. So go to smartinvestorcentral.com and sign up for the free course. Thank you very much for listening. And if you like this podcast, subscribe to the podcast. And thank you very much. And I will see you again tomorrow.